7 financial lessons I learned from Tiger King. Roar.
It's Brian Preston, the money guy.
Brian, I got to be honest. I am so excited about this show. Now, look, we've done a lot of really cool stuff with the Money Guy show. We've shared all kinds of content, covered all kinds of stuff, and I try not to play favorites. But I think that this show might be the one I'm the most excited about that we've ever done. Can I say that? Is that fair?
Well, here's what I want to give you guys a little behind the curtain view here. Bo doesn't watch TV. He just doesn't. So when he comes to me with a pop culture reference and he tells me it is changing the way he sees the world, I'm like, this thing must be good. And without a doubt, I mean, Bo brought this to me. I also had another neighbor who kind of mentioned it to me. I was like, I got to watch this thing. And I will tell you, the first 3 episodes are complete fire.
It's the best television that's ever been made, right? It has to be.
And I want to go ahead and give you a disclaimer. This show today is probably, I don't want to say spoilers, but if you have not seen it, we're going to still give you tons of teachable concept. But do yourself a favor, if you will watch this after you've learned a little bit about Tiger King, you're going to be in on the joke a little bit. We'll just leave it at that, but there's a lot of teachable stuff. If not, just expect, tougher looking Brian than normal, and then Bo looking like an 80s hairband reject. There's all kind of opportunities. And speaking of, why are we dressed? Like, who are we trying to look like? Because I don't, we've done dress up shows before, Bo. I mean, I've been Jon Snow from Game of Thrones, but I looked more like Howard Stern cross-dressing. Yeah, it was just not good. It was just not good stuff. But you've been dressed up as a dragon before.
Dragon. Yep.
This is better.
This is way better.
What's crazy about The Office is I've worn this all day. I was on if the client that I talked to earlier today knew that on the call that I had this flat bill and I had covering my hairline.
There's a reason we do phone calls at a Zoom call, so the client did not see this.
What was up with Brian's attitude today? But it was so we've been doing this all day. But I've had several, because everybody's working from home, but the skeleton crew from the content team, and I've had 1 or 2 of them. Brian, you're actually pulling that off, and I was like, man, maybe I missed my calling.
Maybe you should be a little more hard.
Maybe instead of the CPA life tattoo that I have across my belly, I could have done the biker look. You just never know. You and I are both dressed up as characters, so let's show you who we're supposed to be, and then we're honest with ourselves. We'll show you what we actually kind of feel like we turned out as.
So without further ado, this is Jeff Lowe. This is who Brian is supposed to be. And Brian, I think you actually got pretty close. I mean, it may not be perfect, but it's pretty close.
If I'd have brought a nanny in, maybe it would have probably kicked it up a notch. But right now, this is the best we could do with Jeff Lowe.
So Brian is dressed as Jeff Lowe. I, of course, am dressed as Mr. Joe Exotic. You know what? I just don't think I pull it off quite as well as he does.
I have told Bo that he should blow this picture up and put it over his bed. I really, and it's just incredible.
My wife would love that.
I mean, it's just that is a work of art right there. I think I've also said that we ought to blow this up and put it in the hallway of the office building. So when we do the office tour, that picture is what greets everybody.
I love it. But then we said, you know what? We might have missed the mark a touch because we both thought that we were going for Tiger King characters. But I think each of us hit something a little unique.
Yeah, I came up as one of my Las Vegas friends. I was, if anybody knows, last November I was down at SEMA and I ran into somebody. Little did I know, a few months later I'd look kind of like him with my Jeff Lowe outfit, and here I am. Vanilla Ice. Vanilla
Ice, and it's kind of uncanny how close you look to Vanilla Ice. Mr. Rob Van Winkle, so that, isn't it is it Van Winkle? Is that right? We'll call him Vanilla. Yeah. You look just like him. So I think that's pretty solid. And then, I don't know how I feel about the next one, because I don't know this is not a compliment. I don't know this is where I was going to go with it, but maybe my Joe Exotic is a little bit more Joe Dirt.
It is. It's funny. It's still Joe's.
It's still Joe's. I got close.
We're still both rocking mullets. It's just like yours is kind of kind of like a glamour Joe Dirt.
I'll take it
with sequence.
I'll take it.
David Spade would be so happy.
He would be so happy.
So that's where we were. So now that we've got the costumes out of the way, we want to kind of really feel and channel these things. So as we're teaching financial concepts, you would feel like Joe Exotic, Jeff Lowe. We're kind of trying to correct through experiences of life, create wisdom of things not to do in your financial life. So the first one, number one, risk management definitely matters.
Yeah, when we think about financial planning and how we approach making financial planning decisions, you think about the financial planning pyramid. And generally speaking, in most financial planning pyramids, the biggest thing that you have to cover first, the foundation that you have to have established, is managing risk.
Well, let's face it. Anybody that is dealing with big cats for a living has a high risk tolerance.
It would certainly.
You got to have a little cray-cray in you just to think that this sounds like a perfect job opportunity for the future. It also, the risk of this, of Joe Exotic opening up a big cat, and truthfully everybody in the episode. So if you see all the different episodes and all the big cat people that are out there, they all have to have tremendous blind spots because I just don't know how you wake up in the morning and you go, you know what I need? I need a bunch of big cats. They're going to each cost $10,000 a year to feed.
Just to feed. That doesn't include shelter or
unless you're Joe
stuff.
Exotic, and then you can do it for $2,000. More to come on that. And then the other part is that you think about like somebody like Joe Exotic is that when he comes up with his next big business idea, he's like, you know what we'll do? We'll just name it what our competition's name and just strap the word entertainment. So he named it Big Cat Rescue Entertainment. So that if you want to fast track your SEO search optimization, why not just steal the name of your competitors?
Genius.
So
what could go wrong?
These are the things that show that everybody involved in, Tiger King really had some blind spots when it came to risk. So let's kind of give them some money guy tips on things you can do so you don't end up behind bars like Joe Exotic.
So the very first tip that we came up with and how it relates to your personal financial situation is you need to understand the difference in risk tolerance and risk capacity. Everyone thinks about risk tolerance and they understand that that's how much risk you can take and still feel okay. You're not losing any sleep at night. Well, clearly you've already alluded to Joe Exotic and all of his counterparts obviously have a high risk tolerance since they work with big cats. And you in your financial life, maybe you're an entrepreneur or a high income earner or something like that, or maybe you're young, you can have a huge tolerance for risk, but that doesn't mean that you should take as much risk as possible.
Yeah, because there's another component, risk capacity. How much can your current situation kind of weather? And here's what we always explain to people. It's if you're somebody who's 60 years old, should you be working on a big cat zoo? Or starting one up, or if I would ask this of Jeff Lowe too, by the way, because he's trying to set up one outside of a casino. Not so sure at his stage in life if this is a risk capacity decision. He obviously has a very high risk tolerance, but this thing goes south. It's not a lot of recovery time. And that's what we're talking about with your personal investments. If you're a personal investor and say you're getting closer to retirement, you're getting closer to 55, 60. And by the way, this period we've been through with the pandemic has been a perfect illustration because we saw the stock market get crushed, go down over 30%, and then it has come back. But it is one of those things that if you're a person that's 60 years old and you lost what the market lost, meaning you lost 25 to 30% of your assets, you probably weren't taking into account your risk capacity because do you have the time, the years to recover from that?
Love it.
So that leads us to the next thing. If you understand the difference between risk capacity and risk tolerance, you also need to understand the value of having liquidity. Yeah, 3 to 6 months.
Emergency reserves matters because you never want to have an event in your life happen and respond by saying, I will never financially recover from this. Had Joe possibly had some cash reserves in the bank and been storing some of that money away, perhaps he could have faced some of his financial woes a little bit better.
And we'll get to this one in a minute. I'm not even sure when he said his employee got attacked and lost an arm, he said, I'll never financially. It's probably because Joe doesn't have insurance. We're going to talk about that in a minute because he definitely, you'll see a theme throughout there. Joe had no money. That's why when people started suing him, he's like, come on. Plus he had some crazy harebrained idea we'll talk about where he was just thinking, hey, you just sign this sheet of paper, it'll be in somebody else's name. No problem. But that's a whole nother thing. But definitely liquidity, cash reserves, because we've been through this downturn of the pandemic. Cash is always going to be your friend when uncertainty is floating around out there. And then this is a great case on like the employee getting hurt. Evaluate your insurance and how much coverage you have in places. And what are we talking about? We're talking about life insurance, Bo, disability insurance, even homeowners and property and casualty. Give them some overviews of that stuff.
Yeah, the big thing, life insurance, obviously, when we're young, one of the biggest risks that we have is that someone might be depending on us, whether it be for our income or to provide financial stability. And if something happens to us, we're taken out by that proverbial tiger, they might be left holding the bag. So you want to make sure you have appropriate life insurance. Disability insurance is the same thing. I think the statistic is that a 35-year-old has a 50% chance of being disabled for 90 days before the time that they retire.
Yeah.
A 50%, that's 1 in 2 folks. So disability is a huge risk that you ought to make sure you insure against. And here's the fact, it's actually not that expensive of insurance to coverage. And a lot of times you can even get it through your employer.
And if you work with tigers, I would say that the odds go up much greater
might be a little
than 50%.
bit more expensive.
But it's one of those things, and just touching base briefly on insurance, just because I want to give people a good benchmark.
Sure.
Consider doing like 10 times your income.
Great.
Do 10 times your income, add any, outstanding debt, and you should be better. And we like term life insurance. It's low cost. Plus, you can just insure your need away. And then, Bo, we'd put this one on there. When people talk about property and casualty, we're talking about, your automobile insurance, your homeowner's insurance. Nobody ever talks about umbrella insurance. That's that policy that sits on top of your homeowner's and your vehicle insurance, just to make sure if you had somebody get injured on your property, or you get in a car accident, or your kids do something silly.
Yep.
You have some type of liability protection above and beyond even protecting the items you own.
One of the questions that we always get is, okay, when does it make sense for me to get umbrella insurance and who needs it? Our answer is always, if you have any level of assets that you saved up, or you have a high income or high income earning potential for the remainder of your career, you should probably get umbrella insurance. And it is dirt cheap. It is really inexpensive. It's crazy if you don't have that.
So risk management definitely matters. Could have saved Joe a lot of heartache if he'd understood that concept. So let's talk about number 2. This one is heartbreaking as well. This one, I've actually experienced this with friends, clients, and others that have come into my life. And Joe, this definitely came through in Tiger King. Don't let family members cause you to derail your financial life. And specifically in this one, we're talking about poor Joe's mom. And Shirley, she's unfortunately, sadly passed away now. She did pass away not too long ago. But before Shirley passed away, Joe, through some of these shenanigans where he was changing the names of things and the structures and the lawsuits with some of his competitors, his mom lost it all. Lost all of her financial life and lost a house, was running GoFundMe pages. It's just sad, sad stuff.
At the end of the day, I'm sure the reason she was willing to do some of it, and you can make the argument of whether she knew what she was doing or she was being coerced into doing that. But most of us care for our loved ones, whether it's our children, our parents, our cousins, our brothers, our sisters. And we think that one of the things we're doing by allowing them to utilize us for resources, we're helping, but perhaps we're actually just enabling bad behavior. Because her mom, if she was willing to allow Joe to do that, she didn't allow him to maybe experience some of the pain he could have experienced earlier on, where she thought she was helping, maybe she wasn't helping.
Well, we've seen this. I mean, we have the book right behind us, Millionaire Next Door, and a concept that's all over that is a concept called economic outpatient care, meaning that you might be an enabler of bad behavior of your adult children without even realizing. But let's kind of talk about this from things you can actually do for yourself. Some Money Guy tips on this is, first, think twice before co-signing or getting involved. Family and friendship is already hard. So do you want to add the complication of putting something that is complicated and emotional as money into the equation as well?
Whenever a client asks us, hey, I have my child or a friend or a relative who's doing this thing, this business endeavor, buying this property, spending this money, and they ask me to co-sign it, we always say, well, would you be comfortable if you had to buy the thing tomorrow? Because essentially, when you sign as a co-signer, you're not really taking a second position. You're not really taking a back seat. You're taking a primary position. And you have to approach the decision that way, understanding that if it goes wrong, if it goes bad and you co-sign, you're on the hook for that thing that you've signed for.
So I would treat co-signing, loans, all these things are kind of under the same umbrella. Basically treat them as gifts. You have to understand if you go into these type of deals that you have to be willing to give it away, because I'm going to go ahead and play it out for you. Let me go ahead and give you some scenarios, some stories. I have lent money to friends, and then what's interesting is that is you see a friend that's in need and you feel really good in the short term that, man, I helped them out, I've made them better. But then as the months start rolling, the months lead into a year, and then you see the friend or family member go buy a new car or make some other and you're like, am I not getting paid back? You know, and that's the part. And you start building something, like I said, money and family and relationships is always already hard. You're going to add a complication because now you are wondering, why didn't I get paid back? Or then worse yet, what happens when the relative or family member ruins your credit because you didn't even know on the co-signing that they quit making payments? Guess who's left? Because their address is on it. The bank didn't reach out to you. They just totally ruined your credit off of one family decision. So be very careful. I kind of make co-signing is worse than lending money yourself because here's the problem. Lending your lease out of the money. You can treat it like a gift. Co-signing, they can blow up your credit without you even realizing it. So I treat co-signing like I do when somebody asks me to move a refrigerator or a piano. I tell them, look, if I've made it to my mid-40s with my back intact, we're not going to change it. We're not going to do it right now. So don't co-sign. I think that is a very scary thing. And then I'll throw in another caveat, business deals, because this ties into really Joe Exotic and what he was doing with his family. I have watched very successful people reach financial independence, have conquered the financial game, but then have an adult child come in and say, hey, I've got the opportunity of a lifetime. Let's invest in this. Or maybe you don't even need to invest it. Dad, Mom, how about you just guarantee this loan on this business that I'm thinking about setting up? You know, what could go wrong? I can tell you what can go wrong. You could lose it all. So it goes back to step one, which is talking about risk tolerance and risk capacity. Don't let Junior's dreams destroy your financial independence. Happens all the time, so I want you to be very careful. And that's the biggest part of Tiger King that kind of made me really kind of go, this is so sad.
It was sad for the mom,
I really
for sure.
hated seeing Shirley, Joe's mom, and obviously Joe cared for his mom, but to see her be just cleaned out just showed how poor his decision-making was for the whole thing.
Yep.
So let's talk about number 3. Oof. This is one, Bo, you're the chief compliance officer here, so I'm going to expect you to keep us on the straight and narrow on this one. Because this is alleged type things, but it's you need to make sure you have your estate documents updated and notified all parties involved.
So obviously, if you've watched Tiger King, this was a pretty big deal, and this is one of the extremes. But here's where this kind of hits some real life.
Came out of left field, by the way. Because Bo, by the way, guys, Bo watched this show like 2 to 3 weeks ahead of me. I was kind of late to the party. And he was like, oh, just wait. Which episode? Where are you at? Oh, just wait. There's more coming. Oh, yeah. Have you heard about Doc? No. Oh, you hadn't heard about Doc? And then it'd be like, oh, there's even more coming. So every episode, but this was one, you're like, say what?
Yeah.
Say what? I mean,
this kind of caught you off guard. And here's what I think is so, I don't want to say alarming because that sounds severe. Because again, in the Don and Carol situation, this was an extreme. But how often do clients come to us and we say, hey, do you have estate docs? Oh, yeah, you know, I've been meaning to do that, but I just haven't done that thing. Or, oh, when was the last time you got your estate documents updated? Oh, I did them 15 years ago. Right. Was anything changed since then? Well, no, not really. Oh, well, didn't you have kids and grandkids? And didn't you move to a different state? And isn't your financial circle? It's amazing how often we allow these things to sit on the back burner when perhaps they shouldn't actually sit on the back burner.
Well, let's talk about the Tiger King. I want to make this into a teachable moment. So we got Carol. Carol this is a second or third marriage. I don't know how many they've been through. But anyway, Carol was substantially younger than her new husband. Yep. Because Don had left his family to be with Carol, which...
At gunpoint.
Weird. I mean, he picks up a hitchhiker. They have their first conversation with her holding a gun on him. Weird. I mean, this is what leads to big cats, by the way. But anyway, but what happens is they end up getting together, get married, and then this is the part that's crazy is that somehow Don, he was a very successful businessman. I don't know if they said how it was real estate or something.
Sure, something like that.
But a successful businessman, he goes missing. Mm-hmm. And this is the part, now this is all allegedly, so I want to make sure I'm clear on that because we don't know anything about Carol. And in documentaries like this, you have to be careful taking sides. But the only copy of Don's will and power of attorney was in his office trailer. He had like a construction trailer. Mm-hmm. And his secretary, who was like his right-hand person, knew about it, and she'd been notified, but it disappeared right after he disappeared. And then all of a sudden, Carol, his new wife, shows up, and this is the part that's really weird, but I want to say it's allegedly, but the document says, in case, it's a power of attorney that says, conveniently, in case of disappearance. I've been doing financial planning for over 2 decades, but I've never seen a legal document that I've reviewed that says in case of disappearance. That is like, wow, that's pretty specific. This situation is obviously pretty specific. It's amazing this legal instrument addresses what so happens to happen. It's almost like you had some forethought, and foresight into what might happen. So it's just very interesting. But this is all part of how does this even happen and how do you insulate yourself? Because look, second marriages happen. I mean, you have complicated family structures all the time. And let's even take it outside of even complicated structures. We're all going to pass away. I don't care. Even if you're not working with tigers and big cats, you're going to die at some point. So let's kind of talk about what's some of the things you need to have and what's the money guy tips so that you can make sure you never get in a situation like we saw with Tiger King.
Yeah, I think one of the very first questions you can ask yourself is, do you have the right documents in place? Do you have wills, financial power of attorneys? That's the person that can help make financial decisions. Do you have healthcare directives, the person who's going to make your healthcare decisions? If you have young children, do you have guardianship provisions? And for those of you that say, well, it's just so hard because I want my brother to have the kids and she wants her sister to have the kids. If it's difficult for you guys to have that conversation on this side of the grave, imagine how difficult it's going to be for your loved ones to have that decision when you can't weigh in. So you want to have those conversations now. And even stuff that has to do with like end of life, like living will, what are your wishes, what aren't your wishes? Those are some of the basic documents you need to make sure, even if you're young and death isn't even on your radar, you need to make sure you have them in place.
And make sure people know where they are.
Oh,
I mean, you should at least have an attorney who, if something happens to you, they're going to say, hey, by the way, I got those signed copies over here, or your executor. You want your executor or executrix to know, hey, by the way, we were named in the will. Because, I mean, that's typically when I've named executors, outside of my spouse, I've gone and said, hey, do you mind? I know this is an odd question to ask you, but would you mind stepping up to serve if something should happen to me? That way, if I do disappear, these people go, Brian had a conversation with me. So he's told me where to go find this estate document. I need to see it. Or maybe even better yet, they might already have a copy of it. If you like your children, your adult children, go ahead and give them a copy of this stuff. Yeah,
that's a great point. We talk about there's sort of this three-prong approach to how to do estate documents. Initially, when you do your very first ones, it's okay if you write it on the back of a napkin. I'm speaking tongue-in-cheek there, but just a self-prepared one. And then as your situation advances, maybe you do your own online version, like a LegalZoom one or something like that. If you do that, make sure someone else has copies of that, whoever the executor is, whoever your trusted third party is, and maybe make sure that 1 or 2 people have that, just so you have a record. If you do graduate to the point to where you have an attorney that actually establishes those documents, make sure that your attorney or your financial advisor houses copies of those records so that in the instance of your demise, someone can produce those documents to verify the documents are indeed accurate and reflect your wishes.
Well, I would say either take out all the conspiracy theories. Don, a gentleman that's worth well into, there's all kind of big guesses on what he was worth. But the estimate range was somewhere between $10 to $20 million. Somebody who has $10 to $20 million definitely should have an estate plan that is recorded, people know about it, and not just hidden in their mobile trailer. I mean, look, we're from the South, and we trailers blow away with every tornado storm that comes through. There's a homing beacon in them, so you don't keep your documents for your multi-million-dollar estate in your construction trailer. It's just that's bad common sense there. So let's kind of close out this section and talk about the money guy tips. We had beneficiary designations. A lot of people don't realize wills are not the only thing you need to pay attention to. Whenever you have a marriage, you have a death, you have any type of major life change, make sure your beneficiary designations, divorces come to mind, on your retirement plans, on your life insurance, all these things need to be updated to reflect your desires.
And again, this kind of changes over time. Perhaps when you have young children, your beneficiary designations might be a trust for the benefit of your children. Perhaps as you age and your children get into their 20s and 30s and 40s, trust language is no longer necessary. So it's just something you want to make sure you review every few years to make sure that the beneficiaries on all of your accounts, not just one of your accounts, all of your accounts match your wishes.
And the same thing, wills, you're going to notice a trend. Anytime life changes, births, marriages, divorces,
moves,
deaths, moves, move to a different state, exactly what you're talking about. Those things require you to update the legal documents so legally you're on solid ground and everybody's aware of what's going on. And then, look, we brought this up under insurance, but it's worth repeating. Term life insurance, man. Make sure, because one of the things about Don is he had children from, another
Multiple,
marriage.
yep.
He had an ex-wife. You wonder if all the grandkids and everybody had everything fulfilled, because Don because of his lack of planning, it definitely left a really weird situation.
So just make sure you have those boxes checked and make sure you have a backup to keep you protected.
Okay, let's move on to number 4. I got to make sure I got my jacket on straight. Got the hat looking tight. Okay, number 4. Beware of fakers. Odds are the Jones or the Lows are likely broke.
This was one of the ones, and the whole show was just absolutely monumental in terms of blowing your mind. But this was the one that I thought was so amazing, is the perception that the Jeff Lowe was able to give off to everyone around him that he was this successful mogul, had all these resources, when it turns out that probably wasn't the case.
Well, I couldn't figure out, because I've watched even episode 8. And here's what I can't figure out, Bo, for all the people who are watching this. I keep wanting to say Lion King because I'm such a Disney fan, but it's Tiger King.
Very different than the Lion King.
Very different.
Do not make that mistake with your young kids.
So in this thing, you see that you totally had Joe Exotic fell prey to. He was really the sizzle, the dazzle that Jeff had, because he shows up with Ferraris. He takes Joe out to a big mansion, and then you find out he leased all this stuff. I mean, he had leased the Ferrari. He didn't get the security deposit back because, by the way, you're putting big cats like tigers. I can't imagine that's good on Italian
that's on the leather.
So, and then you got this big leased, mansion. I'm trying to figure out with an indoor pool, and I'm like, of a person who's had rental property before, you don't typically just willy-nilly let people, but they never in the show told you what Jeff did for a living. But it did show, it sounded like as we went deeper, maybe his depth of financial ability was not as strong as initially anticipated. Sure. He was more all hat, no cattle, but he look fancy. And I think that's the part. And by the way, that is the majority of Americans.
I was going to say, perhaps it's not Jeff Lowe that's like trickling into your life, but perhaps there is that neighbor who's right down the street that just bought the new car, or put the pool in, or has the nice clothes, or builds the bigger house, or whatever the case may be. They very well may be doing that, and that may be okay. But I think, sadly, the truth is a lot of folks in that world are kind of faking it.
So think about it. The average American, we've done this stat every year, and it stays pretty consistent. Around 60% of Americans can come up with $1,000. And you're actually
terrifying.
Coming through this pandemic, when you see the huge wait lines at they're not soup kitchens, but the family, where the food banks.
Food banks, yep.
They've had a lot of trouble where people are struggling to pay bills. I mean, that's why, thank goodness, we have the CARES Act that's starting to push money out. Today, I think, is the day I've even heard some of our coworkers have gotten the checks today. So that's a good thing. But it is still scary how lean the average American's running it. So when you're comparing yourself and you're trying to figure out how do the Joneses keep doing, because you're trying to keep up with the Lows, the Joneses, here's what you need to understand. They might be receiving, and if they're not using debt and credit cards to fake success, they might also be getting help from their parents, because there's a lot of research that shows that 75% of parents help their adult children out financially.
Yeah, and frankly, we say this all the time, Brian, it's hard to keep up with family money. And a lot of times, if you try to, you're just going to set yourself up for failure.
And then I thought this is something I've used in a previous show, is that the majority of people are just living for today. And you can see this in this stat right here, is 68% of adults, young people, expect inheritances, yet only 40% are going to receive them. So there's a little bit of a disconnect. You might be thinking that mom and dad are going to leave you something, but there's a good chance you might need to start planning for yourself. So pay attention to that stuff.
But here's the fact of the matter. You cannot control what the Joneses do. All you can control is what you do. So what are some of the tips that you should take away to make sure that you don't fall prey? Well, if you've listened to the show for any period of time, you know that we think that housing costs should be less than 25% of your income. So whether you're renting or have a mortgage, you want to make sure your housing costs stay under 25%. Your cars, if you're going to finance an automobile, you have to make sure it's paid off in 3 years. Follow the 23-8 rule.
Yeah, and all that means is you're going to put down at least 20% on the car. You're going to pay it off within 3 years. You go to a 3-year amortization. You're going to ensure that your total car payments, it doesn't, and I'm not talking about every car gets this rule. I'm talking about each car. You total up all the cars you have. I don't want car debt to exceed more than 8% of your income. That's 23.8. And here's one caveat that we should have put an asterisk on. If it's a luxury brand, it's 12 months, same as cash. This 23.8 only applies to normal brands. I want you, like if you're buying a Honda, a Toyota, you're just trying to make sure you have dependable transportation for your family. That's fine. As soon as you start buying luxury brands, it needs to be 12 months, same as cash. And then, of course, there was a period where I felt like we did every episode, we had a slide on this, but it is so worth repeating because you see how much trouble the average American has. You've got to pay off your credit cards monthly.
You have to. It is one of the single most detrimental things. We talk about how powerful compounding interest and 88 times over can be. Debt, specifically consumer debt on credit cards, works in the exact opposite direction. And generally speaking, it works a whole lot faster than compounding interest on the growth side.
So Tony here. Tony is a predator. There is no doubt he's a predator. Think of your credit card as the same way. You do not want to be the prey because anytime you get to debt that has double digit, I'm talking about close to 20% interest rates, you are nothing more than the prey that is being fed to dangerous Tony here. So pay attention to that stuff.
Did you just come up with that on the fly?
What's Tony the Tiger?
I
love Frosted Flakes.
He's great.
So let's move on here and talk about number 5 because man, this one is very important. Number 5 is surround yourself with good counsel and advisors because, guys, everybody on Tiger King. This is a spoiler alert, but it's not a very big spoiler. Everybody on there was a mess. Just straight up a mess.
I can't tell you how many times my wife and I were watching. We was like, well, that person seems like they're the most. No, that person, they're the most. No.
Think about this. I don't even know how they got the videos on some of this stuff because there's one meeting where Joe is going to go meet with his attorney. And he says, "Hey, make sure you get this on tape." And then they get in there and you're actually watching this documentary and he's in there meeting with his attorney. You don't get to see the attorney because it's just they got the camera
audio,
at the angle. You kind of got an audio, but the attorney all but says, "Joe, you hear what I'm saying?" He's basically alluding to destroy evidence. I'm like, even the professionals on this show are crazy. It is just wild stuff. And then this saddened me a lot. And I think this goes to this point in number 5, which is when it all goes down at the end and Joe, has he gets prosecuted. He's kind of all by himself.
Yes, yep.
All by himself. And that's a sad thing because we all like to think if you get, this is why you want to be part of your community is because if you ever got sick, ever got hurt, you want to know that you have your own people that are in your corner that are going to protect you, save you, be there for your support. Joe didn't have any of that.
Yep.
And I think that leads to, and here's some teachable moments that we had is that you really do need to pay attention to who's around you. You are the best. Was it Jim Rohn?
Jim Rohn, motivational speaker.
Yeah, he's a motivational speaker, had the quote, "You are the sum of the 5 people closest to you."
So I think you can even think about the 5 people you spend the most time with. Who are you surrounding yourself with? And how would you describe their character and their decision-making? If they are of poor character, poor decision-making, I'd be nervous about that. If they are of sound character, sound decision-making, maybe that's a good thing and it's something you should stay aware of.
Well, I think it goes even deeper in the fact that if you don't have grounding people surrounding you, there's issues because the noise around you, look, there are so many people that are trying to convince you are part of the herd. So peer pressure is a true element. I didn't want this coffee today. It's past 1 o'clock. But you know what? Everybody on the content team wanted coffee, so I'm probably going to be up till 2 or 3 tonight drinking because I drank this peer pressure coffee. But we are as humans highly susceptible to peer pressure. And you can see it on a daily basis, especially with stock investing, financial, any type of thing. There's a herd mentality to protect you. Just kind of watch out for the headlines.
Sure.
Watch out where your sources are. Watch out who's influencing you because there are so many industries, there's so many things that will take advantage of you if you're not grounded.
That's exactly right.
So let's talk about some money guy tips to help protect you from this.
Yep. So the very first one is just know your why. When it comes to the decisions you're making and the things you're doing and where you're spending your time and energy and talents and efforts, understand what your why is. Why is this something I'm devoting my time to, my resources to, my energy to, my effort to? And same thing with people. Understand the people that are around you and why do you surround yourself with those people? Are they positive influences? Are they lifting you up? Or are they negative influences that are potentially pulling you down?
Yeah, I'd written down real quickly, who do you want to be? Where do you want to go? And what is it going to take to get there?
Love it.
Because those are the things, if you can do those things, it will give you more of a vision plan to move there. And it'll also keep you grounded and keep the distractions will just kind of fall away. And then I put this one on because I felt like this could have helped Joe a lot. Because, guys, find a mentor who's successful doing what you want to do so you don't have to go reinvent the wheel, but also you can have that rudder that is going to get you to the destination faster instead of you just kind of out there just doing it however you want to and then not having purpose.
Love it. I think that's great.
Just horrible stuff. So let's talk about number 6. Oh, man. Rebe did outstanding on this picture that's coming up. Because here's number 6. Plan for the long term, not the cuddly short term. And here's what we mean by this. Tiger cubs are cute, but they sure do grow up big and very dangerous. I mean, look at that thing. Who wouldn't want to cuddle with that tiger cub?
I mean how could that thing possibly ever hurt you, right?
Okay, Bo, I don't want to get you in trouble.
Oh,
but
Lord.
You admitted that after you and your wife watched this, there was a part of you that was like, is it wrong that I want to pet that tiger cub?
I want to go to like a petting zoo and like hold a cub, and then it was making me feel awful about wanting to do that. I still actually don't know if it's good or bad. I have no idea.
But here's the good news. I know there's not a chance that you and your wife are going to end up owning a tiger cub or doing anything because you think long term, you don't think short term.
Well, and it's against our HOA right now, so there's no way I would do that.
I'm not sure anybody's reading the HOA covenants on Tiger King. But this is the thing about success. It separates failure from success is having a vision plan for success. I feel like everyone has a dream, but very few have a plan. And then it's just on this show, everybody here was a mess. They were here for a good time, not a long time, and they definitely didn't have a plan for the future. So you got to make sure you understand those concepts because have you poured the foundation for where your empire begins? It's not by going and buying a tiger cub. It's not by buying a jet ski or a boat without a plan. I mean, that's the thing. I think that we see people not building army of dollar bills because they get caught up in, hey, for $200 a month, I can do this. For $200 a month, I can do this. But there's no long-term to their, man, I'm here for a good time, not a long-time mentality. That is what happens to the public.
And what I think is beautiful, Brian, I've heard you say this so many times to listeners, to clients, to friends. A dream is just a dream until it's actually written down. Until you actually put pen to paper and come up with a plan for, these are the steps. This is the next first step I'm going to take to ultimately move towards this dream. If you can just take put that one piece of effort in to begin with the end in mind, think about what that thing is you want to do, and actually chart your course, you'll be amazed at how you slowly start moving along in that course.
Well, it's part of when it's written down. It's just like when people are trying to lose weight, what do? They put a picture of what they want to look like, or maybe of a swimsuit or a destination to keep them grounded and motivated. I think it goes a step further when you create a plan, when you create a vision of where you want to be financially and you create a plan. When you see a trail in the woods, how did it get there? It's because the path got worn over time. You kept walking down that path. Yes, there were logs in the way. Yes, there were obstacles. But if you keep doing things over and over again, it becomes more and more likely. And that, like I said, that dream becomes a reality because of the planning, the long-term stuff you're doing. It moves all those things. So let's kind of put some money guy tips and talk about how you can do this for yourself. The first, because we talk a lot about financial stuff, Bo, but reality, when Warren Buffett talks about this, if you go watch Becoming Buffett or whatever the HBO documentary is, he talks about that you only get one vehicle, and it's your body, so you might as well take care of it. So go get that annual physical. Don't take for granted that just you're always going to be mobile. Make sure you're taking the steps to protect yourself.
And here's the thing: if you're doing everything right financially, and you're advancing in your career, and you have a healthy income, and you're saving money, and you're doing tax efficient strategy, and all this stuff, but you're not healthy enough to actually enjoy the fruit of that labor when you get to the deferred gratification. The whole point of deferred gratification is being able to be gratified at some point in the future. You got to make sure you stay healthy enough to get there and actually enjoy it the way that you mean to enjoy it.
Now, we put step 2 in here, or just the second thing, the bullet point here is make a business plan or set a career goal. Don't just be a rudderless ship.
Sure.
Yes, you might be a big ship in the ocean, but if you don't have a destination, knowing where you're going and the tools that can help get you there, it's just kind of not working out. So there's not much. If you're a business, run a man, I'm going to be rich scenario, run a what I think's going to happen, and then run, oh my gosh, I'm a fool for doing this. Do the same thing with your career. I think a lot of people think that only pertains to entrepreneurs. I want you to have goals with your career and know timelines of what you want to do, how you're going to accomplish them, and then make sure you have the skill set so it's not just a dream there as well. And then the last thing, personal finance. And Bo's kind of alluded to this. This is if you want to know a secret recipe to our success. And I've passed this down to you, but we kind of really geek out on this every year. Do an annual net worth statement. If you will do an annual net worth statement for yourself, it's really over time, it's going to wake up that invisible hand in your brain that leads you and guides you towards success. But it's also going to highlight the things you're weak on or the things that you're doing well to affirm it and keep it going even better. That is what's going to drive you to success.
I have this conversation so often. I'll be talking to someone, they'll be like, oh, well, I don't really have a big net worth right now. Or, oh, I don't want to do that. My life, mine's a mess. That's great. The beautiful thing that yourself 5, 10, 15, 20 years from now will thank you for is starting tracking now so you can see how far that you come. I always get so mad when folks are like, or not mad, that's not the right word. But I know in the past, like when I've set a goal and I want to lose weight or get shredded or lift or whatever, and I never took the before pictures,
right.
You kind of just, you don't realize how far that you've come. If you start tracking your net worth statement, start today doing that, you'll be amazed at how far you're able to go.
No doubt. That is the foundation of your financial empire and getting you on the first step of building that abundant cycle that hopefully leads you to the doors of abound wealth at some point.
Love it.
So let's kind of close it out. Number 7, this is the last thing we learned from Tiger King, and this is a big one. Love what you do, and you'll never work a day in your life. I want to make sure I get this straight. Now, you notice, that's us.
That's not Tiger. I know it looks like it's Joe and Jeff, but that's actually us in the background of that picture.
I can't believe that Bo and I get to come to work and do this for a living. I mean, it really is amazing. I promise you'll never know under this tough exterior with the flat bill that I never wear flat bill. I immediately want to start bending this thing as soon as I take it out of the box. Is that, CPA, CFA, both CFPs. It is one of those things. We are doing what we're supposed to, and that makes things a lot easier. But I want to kind of talk about Tiger King. Here's the thing that struck me about how incredible it must be to hold a big cat or work with a big cat, because let's take 2 examples. You had Doc Antle, is in South Carolina.
Myrtle Beach, yep.
He has women coming from all over the country to live in questionable housing, be hit on by a much older boss,
Creepily.
working 18 hours a day,
Exhausting.
so that they could basically hang out with big cats for not making anything.
Unbelievable.
So then you got Joe, who offered, if you come work for Joe Exotic, you get to live in a trailer. Plumbing may not work.
Questionable.
Their meal plan consisted of expired Walmart meat.
Disgusting.
People showed up to do this.
They still wanted to do it.
So, and by the way, after the zoo and Joe Exotic is gone, these people are still somehow affiliated to doing this stuff. So I'm just telling you, there is something to, if you will do what you enjoy, you'll never work a day in your life. And it is kind of incredible. These people obviously love the work. They love the notoriety, but there's something to be taught there. So, Bo, let's talk about some Money Guy tips on how you can ensure you're happy and also doing things right.
Yeah, this one is so, I don't say silly, because it keeps coming up in study after study after study after study after study. One of the things they talk about that leads to happiness is convenience. And so one of the things they talk about that leads to unhappiness is inconvenience. And there was a study that was done. It interviewed, I think, 900 working ladies in Texas to ask them what is the worst activity they do on a daily basis. And the number one worst activity they said they do on a daily basis was their morning commute.
Yep.
Living far away from work, having to fight traffic, having to be in stop and go was just something that didn't lead to happiness.
And it was hard on relationships too. And that led to the second thing. We were talking about how, one of the things you're trying to figure out is how much is enough? And what we find, and you see this all over the place, we've done shows on it, on happiness, and the data point is $75,000 is about what it takes to cover the basics. That does not mean you're fulfilled. That does not necessarily mean you're happy, but it does mean you're at least satisfied that you can pay your bills.
Sure.
So you probably ask yourself, well, Brian, what does that mean, or what does that mean for what creates happiness, fulfillment? What is that dollar sum? And it's not so much about the dollar sum or the amount. It's really feeling like you have purpose in your life, that when you wake up every morning, in your own small way, you're making the world a better place. If you can feel like that, if you have the basics covered, like $75,000 a year, feel like you're waking up and doing your part to make things better, you will have purpose. You will have fulfillment.
And this is what I think is so wonderful about what we get to do on a daily basis, because we get to work with successful folks all over the world in very different industries. It's not like you have to be a humanitarian serving in a third world country to do something that is purposeful and impactful.
Yep.
If you are in the top 10% of hair cutters in the entire country, but when you meet with your clients, you change their life and the way that you cut their hair and the way they're able to feel about themselves and all that, that's awesome. We get to help people make good decisions with money. We get to dress up like this and share financial information. But man, I wouldn't rather be doing anything else in the world, because this is what I love and this is what makes me feel full of purpose. You just have to figure out for you what that thing is and how you do it incredibly well.
We come out of this pandemic, I believe a lot more people are going to say thank you to their hairdresser.
Yeah.
And there is no doubt. You want to know how valuable you are? Go through a pandemic, and you will quickly see that we all enjoy the normalcy of getting your hair cut, getting your nails done, those type of things. And I think it's so interesting how little things that bring you purpose, happiness, fulfillment. This is a great opportunity coming through a unique time in history like we are, where you can double check, measure twice on a lot of those goals. And what are the things you miss? Go do more of it when you have that opportunity. Guys, look, this was a fun show. We got to dress up. We got to goof off. We got to bring props into the office. By the way, here's something that's funny, little known fact. We did not buy this. We didn't buy. The only things that got bought was my hat, the headband, and Bo's wig and the sequence. The rest of the stuff came from parts of the Abound Wealth family. So you can read a lot between the lines, is that we have access to some pretty cool things behind the scenes just by the people that work with us. It really makes things fun here. But we had a blast doing this, because I find myself, and this is how I know you probably are a financial mutant too. You're watching this either on YouTube, you're listening to the podcast of this. You are a financial mutant. You think about things differently, so that when you're watching Tiger King, you don't just see that for the entertainment shock value of it. You say it for, oh my goodness, there's some huge things that these guys missed on basics of financial. Learn from these things. Apply this to your life. Use these concepts so you can be better. And we talk about it all the time. You're like, how can these guys come and do this content? As you said, Bo, we get paid to do this. Yep. How we can do this is we call it the abundance cycle. You come here, we're just going to give it away for free. Now, if this is your first episode, we don't dress up every
Maybe
time.
Go check out some of
our others so you can see that the credentials are real, but we do try to. I felt like, look, this pandemic has caused a lot of people, a lot of serious stuff.
Yeah,
we've had sickness, we've had death, we've had a lot of things. That is a great word to put to it, heavy. It's time to smile a little bit.
We just want to lighten it up a little bit.
It's just time to lighten up, and not completely, but just to bring a little smile to your life, because I think that we will get back to work at some point. At some point, this too, yes, shall pass. And when we get back, I want you to enjoy it and come learn, apply, grow. That is what the abundance cycle. You're going to continue to have success. When you reach that point, you say, this thing has gotten so big, I need a co-pilot. I want you to remember Brian and Bo, Abound Wealth. We have incredible advisors here at Abound Wealth, and we work with people all across the country. We love doing this. We're going to continue to bring you the most detailed stuff you can find on legislation, other things that are constantly changing, but we're also going to entertain you and also still try to teach you, because that's what we're trying to do. That's what the legacy of this show is. Started in 2006 as a platform to help people go beyond common sense with their finances. So I'm your host, Brian Preston, Mr. Bo Hansen, Tony, the Tiger, Reby off camera. Content team is having a blast. We're missing everybody who's working at home, but we're all coming to you, and we're going to keep it coming. Money Guy team out.